What's up? What's up? What's up? It's Jeremiah Davis, the funding coach. How you guys doing today? Happy Monday. It is Monday Fun Day, where I'll be off talking about some funding tips, explaining different loan products for business funding, and how to use those different loan products, what the qualification requirements for those different loan products. So the business funding is not an exact science, and there's a lot of nuances. No two funding deals are the same. Okay, so today I am talking about um, MCA loans. What you need to know about MCA funding. First of all, what is MCA? MCA is basic acronym for Merchant Cash Advance, and technically, it is not a loan. It is an advance on future sales of your company, right? So an MCA merchant cash advance lender will look at the company's financials, bank statements primarily, and then they will determine how much they can advance you based on your bank statements, right? So they're advancing you. MCA is a merchant cash advance. It's not technically a loan, it is an advance on future sales from your business. So, say hypothetically, you're doing $20,000 a month in sales. Um, some MCA lenders will or companies will give you say $20,000 to $30,000 over the course, and you would pay that back over the course of anywhere from 3, 6, up to 8 to 12 months, either in daily or weekly, and sometimes monthly payments. So it's not technically a loan; it's an advance on future sales. That's how they would describe it to you. Um, now, these usually are a bad word in the industry. When you tell someone that they you want to get them an MCA loan, they typically say no, 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 I don't want that, right? And equivalently, in the industry, I kind of refer to them as payday loans for businesses. They're usually anywhere from 20 to 30 up to 45% interest. So they are expensive, but I classify them as a necessary evil because sometimes if you're an entrepreneur and you're short on cash and you don't have all the rest of your financial documents in order, then you could be this could be the only option that you have. And if it is the only option that you have, then you need to come up with a strategic plan on how to utilize that money and get it paid off as soon as possible. And I coach my clients, okay, if this is the only thing we can get, um, then this is how you should use it, right? I recommend that you put as much of it aside as you can. So hypothetically, um, I got a client, I think it was like $17,000 is all they could qualify for because they had issues with their personal credit, right? All lenders are going to check your personal credit. Now, these loans, and it's a soft pull, it's not a hard pull, it's not a hard inquiry, and it does not reflect on your personal credit. So these are still business loans, um, uh, but they don't report to personal credit. Okay, so if you if you only qualify for an MCA loan, like I said, I had a client, got them $17,000. They needed the money, but I said, well, you take the 5,000, approximately it's like 4,500 of it, and set it aside, and that will cover your weekly payments for the first 2 months, right? So the weekly payments were covered with $4,500 of the money for the first 2 months. Now use the other money and see how you can generate more capital in that next 2 months. Also, while you're doing that, try to improve your credit so you can qualify for like a business term loan, working capital, revenue based loan. Okay, um, so that's kind of how I use them to help my clients, level up, get to the next stage. If you can take, say 2 or 3 months of payments, put it aside, and use the rest of the money to generate more revenue, then you're that'll work, right? So for this particular situation, I told her to take 2 months of the revenue, put it aside, right? And that leaves her over basically $12,000 that she can use to generate more money. I said, now, first thing you need to do is get your credit fixed because that's the only thing preventing you from getting a business term loan is you got issues on your credit. Once you have your credit fixed, then we can go back and get maybe 50 to 75 to $100,000 in a business term loan, and you can pay back the $17,000 loan within 3 months instead of keeping it, 6 months. So, and she agreed. She went ahead and accepted that, and hopefully, and that way, then I keep the customer coming back because I'm giving them solutions to the problem. I'm putting, giving them something now to help them, but also giving them a plan to the future of being able to get more money and pay off this higher interest money. Right. And I got some really good MCA banks. Her interest rate is like about 20-25%, which is very good for MCA. Okay. So those are the type of things that, I'm helping my clients with. Or if you're in need of some working capital or cash, and you can, and I'm going to always advise you, okay, you take this money, make sure you're putting at least the first month, if not 2 to 3 months of the payments aside, and then have a plan to be able to get more money within that time frame and then pay that off. Okay, whether that's credit or whether it's that personal credit or increase in sales or things like that. Um, and that's the idea, right? If you have good credit and and your business doesn't have like more than $10,000 a month in sales, most MCA lenders will not loan to you unless you at least make $10,000 a month, right? Another thing they're going to be looking at is um, is is your daily balances, right? How the things that they're looking for. They want to see more than 7 to 10 deposits in a month. They also want to make sure you don't have more than 4 or 5 NSFs in a month, right? So if you have too many NSFs, then they're going to loan to you. If you don't have enough deposits, they're not going to loan to you. So those are the type of things you need to work on while you got this short-term money and generate more money, okay, or be ready to apply for a better quality type of loan, okay. So that's what these type of things do. They, like I said, they're a necessary evil. And here's the thing: why are they a necessary evil? Because most people do not know what they qualify for. A lot of people come to me and say, "I want this type of loan," and then I have to tell them, "Well, you don't qualify for that type of loan." Okay, whatever the case may be, but I know what you need to do to get qualified for that type of loan. Okay, if you want a business term loan, um, the qualifications are pretty standardized with most banks. It's a minimum of 1 to 2 years in business and making over $100,000 a year with a 700 plus credit score, no derogatories, right? You can't have, the NSFs or 2 or 3 deposits. They want to see that because here with the deposits, why they want so many deposits instead of like I have a client that's like an insurance agent makes over $100,000 a month, but all the money comes in goes right back out, right? And all the money that comes in is in 2 or 3 deposits a month, right? So 50,000, 30,000, what have you, 20,000 in like 3 deposits. The banks looks at that as well. If you miss a deposit, then your whole revenue stream is changed up. You can't afford any money. And then when they're looking at business term loans, they're checking your bank rating score. And if you make 50, 60, $100,000 a month, and the bank rating, but your daily average balance is less than $10,000, you're not going to get approved for that business term loan because you can't afford a $100,000 business term loan. because your every dollar that's coming in is going out, and your daily average business checking balance is below what they want to see. Okay, so these are the type of things you need to know. If you want a particular loan type, figure out what you need to qualify for that loan, right? So that's the most time I my clients usually have good credit scores, all right, but not good credit files. Okay, having a good credit score is not enough. Okay, I have people, many clients right now, they have a 700 plus credit score, but they got two or three different collections, or late payments, things like that. Maybe their score is being boosted by some other credit cards or authorized user cards, things like that. But they don't have a strong credit file where they have several credit cards with like nice limits and underutilization. Okay, so those are the type of things you need to take into consideration when you are applying for funding. What type of loan do you qualify for? Not what the type of loan that you want. Okay, everybody wants the best type of loan that they get. They want an SBA loan. They want to work. They want a business term loan. They want this or that. But some of the times those things aren't available until you're prepared and know the qualifications, right? So, in a lot of times, I'm having to have conversations like, get this now, put some money in your pocket, follow my advice, and get the MCA loan. Put the first 1 to 2, maybe 3 months aside. Use the rest of the money to uh, generate more revenue, fix your credit, get in a proper position to increase to apply for a business term loan or a working capital revenue based loan, something like that. So those are all the little nuances that you go, and that's why I thought, let me go ahead and jump on here. I'm sure I've done an MCA loan training in the past, but there's a reason behind that. The reasoning behind getting an MCA loan is most likely because you don't qualify for the loan type you want or the best loan, right? And I'm going to tell you what you need to get qualified for those better type of loans, and then hopefully you can develop a plan to implement those things so you're better prepared in the next couple of months to get that type of loan, and you can utilize this money to increase your business, whether it be acquiring new products or services, personnel, equipment, things like that. So that's why they're necessary evil, is because yeah, you just don't know the qualifications. The qualifications for a business term loan, or qualifications for an SBA loan, the qualifications for a working capital loan or revenue-based loan, equipment loan. There's a myriad of different loan types available, but they all have specific qualifications and requirements. And all lenders can have their own variation of those qualifications and requirements. All right. So some banks, they don't work with certain industries like trucking or car dealerships or things like that, or things that they perceive. They can choose which businesses they want to work with and not work with. Okay, it's whoever runs the bank or owns the bank. They put those things, or the lender. And when I say bank, I'm not talking about your corner bank like your Bank of America or your Wells or your Chase or anything like that. I'm talking about lending banks that all they do is lend money, right? All they do is lend money, and they can dictate what type of business and what type of clients, what type of credit, all these things. They put these guidelines in place, um, because they've had either bad experience with this type and good experience with another type. So they can craft and they get their niche, type of clientele that they want to lend to, right? And then some of them, require that you make $50,000 a month to even get into to them consider you for a loan. Some of them require you make over 100,000. Some say, we don't work with, if you're a trucking business, you got to make over $300,000 a year for a trucking business to get loans with some banks. So having a myriad of lenders to go to for a wide range of different loan products is very beneficial, because I can shop it around, and shopping around doesn't hurt your credit because it's all soft pulls. There's no hard inquiries, you know, and then I can get multiple offers back and present them to you, and then we can discuss what the best options are. So sometimes an MCA Merchant cash advance is a necessary evil, but if you work with me, I'm going to give you a plan and a strategy to use that money to increase sales, increase revenue, and to get out of it as soon as possible. Okay, and that's why I always recommend that you put the first, 2 to 3 months of payments out of that money aside, so you don't have to worry about the payments while you're focusing on growing your business or generating more customers or whatever the case may be. Okay, so don't be scared of an MCA. Don't be scared of an MCA, but be smart about it and know how to utilize them so that you can get access different funding, right? As just a recap, MCAs, merchant cash advance, are not loans. They're advances on future sales of your company, right? Your company, um, if it's making $20,000 a month, you can probably get an advance of $20,000 to $30,000, right? And then you're going to take the first, month, 2 months, 3 months, as much of it as you can, put it aside to make those weekly or maybe sometimes daily payments, sometimes monthly payments. Um, and then when and within 2 or 3 months, where you have to get your credit fixed, or you have to increase revenue, whatever the case, whatever the issue is that's preventing you from getting a business term loan or a better quality loan, you have that 2 to 3 months to work on that. And 9 times out of 10, it's personal credit, right? It's personal credit, or it's too many NSFs or not enough deposits or things like that. So the bank's going to look at the last 3 months of bank statements to characterize what type of loan, how much money that they can lend you. So whether we're going for a business term loan or, like I said, another loan type, I'm going to give you the qualification requirements for the loan type I think is best fits your needs, right? And then now, if you get this MCA now, in 2 to 3 months, we're going to get out of it and pay it off, and then we can get you into a different type of loan. But we'll get a different type of loan to pay it off, so you don't have to pay it off out of your own pocket, but you're using other people's money. Like, for example, if I got you $20,000 in the MCA loan, and in 3 months I was able to get you $50,000 to $75,000, you pay back that $20,000, and you still got more money, and now you got monthly payments for a term up to 3 to 5 years, um, to pay that back. Okay, so that's kind of the strategic nature behind the MCA loan that I wanted to explain to you guys, because a lot of you guys are getting, probably applying for loans and only getting a a MCA pre-approval, um, but not knowing what it takes to get the loan that you want. Okay, and not knowing that you can use an MCA loan to leverage and put yourself in a better position to get a more quality, more desirable type of loan product. Okay, so it is very necessary to be able to get capital when you need it, and to be able to know how to use it and position yourself to get more capital or better terms on a different type of loan. Okay, so those are just some tips and tricks. If you want to know more, follow me on Facebook, YouTube, Instagram, what have you. And if you got any clients, if you're interested in being an affiliate, or if you're interested in being and using some of us, using us for your as a brokerage house or your clearinghouse to close some of your loans, we do over 20 different loan types, business loan types, everything from real estate to equipment to working capital. Things. So we have a large Rolodex of loan types, as well as lenders that we can shop to get you the best terms on a loan, and give you a plan or a strategy to utilize money to put yourself in a better position. Okay, so keeping it short and sweet this week. Catch me on Friday for Black Label Friday, where I'll be going over some new features of the software and things like that. My name is Jeremiah Davis. I am the funding coach. Peace.